Hey there, welcome to Be the Boss of Your Money. I'm Mitch Goldberg, and this show is all about personal finance, investing, borrowing, all of the things that we need to know better so that we could become the best possible version of our financial selves. We're going to talk a little bit about interest rates, and I know this sounds funny to you because you never heard this before or strange to you. Not all interest rates are created equal. So the Fed is expected to raise rates for the eighth time in a row on Wednesday. The Fed's having a 2 day meeting. They're having their first meeting tomorrow, first day tomorrow, second day Wednesday. And around 2 o'clock, the announcement will come out in terms of the Fed raising rates. Now, it's widely expected, 99% expected, according to the CME, that the Fed will raise rates 25 basis points, which is a quarter of a percent. Okay, there's 100 basis points in 1%. So 25 basis points is a quarter percent. We like to talk basis points when they could just say a quarter of 1% or 0.25%. But when we talk about basis points, I don't know, some people feel like, oh, it makes me more sophisticated to talk in basis points. Whatever floats your boat, I'm going to say a quarter of 1%. Okay. The Fed's been raising rates. It raised rates 425 basis points. I did it myself. 4.25 percentage points. Okay, is what the Fed raised rates. The Fed funds rate is it's a range, 4.25 to 4.5%. The Fed funds rate's always a range, by the way. It's never an exact amount. It's a range that the Fed looks to maintain on short-term interest rates. And when the Fed raises rates, it raises the prime rate and other short-term borrowing rates. We're going to talk about this, what this means for you, for your money, and why this is not going to hit everybody equally. And in fact, why some interest rates that you pay could actually go down. And we've actually seen rates, the mortgage rates go down. So let's just roll a quick intro and we're going to have a really good show. And I'm going to teach you something here that I think needs some education, some clarification, and we'll go over the market close and a couple of other things. Here we go. All right. Thanks so much for joining me. I'm Mitch Goldberg. We're just getting started. If you have any questions about personal finance, investing, borrowing, interest rates, the Federal Reserve, policy statements, etc., you hit me up right now in the comments. Ask me your questions. I love hearing from you. It's the best part about doing this. I truly love hearing from you. It's just a great feeling, and I just want to be helpful. Okay, this is not an infomercial. We just want to talk about making you better with your money and teaching you things that you might need to know, that you might need a refresher course on. And you know, we talk in plain vernacular here. We're not giving you the mumbo jumbo. Okay. Um, and if you don't mind, give us a thumbs up, a heart reaction, whatever reaction is available to you, depending on which social media platform you're watching from. We're live streaming to YouTube, LinkedIn, Facebook, and Twitter, and we post the highlights on all of those channels. Plus, we also post highlights almost daily on Instagram. And if you want to just a real quick way to learn about social media, if you want a real quick way on my social media channel to learn about personal finance and investing, there you go. Follow me on Instagram because it's just very quick snippets, 30-second to minute and a half videos all day long. And I love it. Love it. Love it. Okay. So let's just take a look at the market overall. And we'll take a look at a couple of things. So let me pop myself up here and let me get rid of the this. Okay. So the Dow the Dow is down 260, broke a 6-day winning streak today. The Nasdaq was down almost 2%. That's pretty substantial. Down up or down 1% in any of the major averages definitely gets my attention. But when you're looking at 2%, that definitely captivates me a little bit. It's a pretty significant move in a day. although lately it seems more commonplace, it is historically pretty significant. And just so you know, you can't invest directly into an index, but you can invest into a security that tracks or mimics an index. S&P 500 down 1.3%. Gold was off a little bit, no great shakes. Oil was down pretty good, but not just below 80, but now below 78. I think it was Shell Oil or BP that said they see global demand eventually going down because so many countries and people, households, consumers, businesses are switching to sustainable energy. Uh, and I just a real quick riff on this. I hear some people. I really am into this stuff. Okay, and I hear someone who's an influential person say, "Oh, solar." Okay, so a solar panel maybe captures 15 to 20% of the energy that 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 the sun hits it by. Okay, so whatever sunlight gets into it, 15 to 20% of it is converted to energy. The rest of it is basically bounces off the solar panel. And if you have too much solar panels, that could actually heat the earth. So this is why covering the entire Sahara Desert with solar panels is actually a bad idea. Okay, so this is getting a little sci-fi here, okay? But uh, then the other thing is, oh well, what if it's not sunny outside? Oh, what if it's raining or nighttime? Okay, we don't need solar panels to power our homes 24 hours a day, 7 days a week, 365 days a year. Just solar power helping to electrify your home, you know, on most days, on just the sunny days, on the nice weather days, that is more than enough to dramatically reduce the cost or the usage of fossil fuels to heat and cool and electrify our homes. It doesn't have to be every day. And same goes for wind. Well, if it's not windy out, well, first of all, wind is free. Now, it does cost a crap ton of money to build one of these big giant wind turbines. These are very expensive and pretty complicated pieces of machines. Do you know one of the fastest growing, one of the fastest? Do you know that one of the fastest growing jobs in America are wind turbine workers? Yeah, it's actually a rapidly growing industry. But we don't need wind all the time. We just need enough wind to reduce our carbon footprint a little. You combine that with solar, you combine that with battery storage, and it's just a mix. It still takes oil to make wind turbines because everything you have, every piece of plastic, every piece of glass, everything in your iPad, your iPhone, stylus, plastic, these are all petroleum based products. So we're still going to use petroleum to actually manufacture things. And we're going to be manufacturing more things using petroleum to help with this, supposed energy revolution. But it's just part of the mix. It's going to be a very gradual shift. What can I tell you? Ford today cuts prices of their Ford Mustang Mach E. They cut it by like $4,500 on average, depending on which model you get. They did say that people who bought that particular model, that EV, since the beginning of the year, should be getting some kind of refund or something for it. And what they're doing is they're dropping their price because they're being forced to because Tesla dropped their price. Tesla is hoping to sell. They're forecasting that they're going to sell 1.8 million cars this year, up from 1.3 million in 2022. So when you're getting into the 2 million range, that is a pretty significant amount of vehicles. Okay, that is taking share away from everybody else. There are a ton of EVs coming out. I'm more of a hybrid individual because it suits my lifestyle. But if I was in construction or a carpenter or a plumber, I would be driving a pickup truck or a van. And I'm going to use the gas because that's what works best for that vehicle. Okay. EVs and electrification, electric cars are not for everybody. It depends on the use case of the individual. This is, by the way, why I am not particularly keen on mandates. I think the market will fix these things on its own. I am an environmentalist, believe me, but We shall see. I don't think we have the infrastructure for everybody to start charging cars. And for me, I'm a solo parent in a solo parent household, and my only car cannot be a Tesla. Then I would have to have two cars. I'd have to have a four-wheel drive car and a car that runs on gas just in case I didn't have energy in my other car. It just works for me. Okay, I'm getting off track here. Oh yeah. Anyway, let's get back on track. 10-year yield 3.53%. The VIX is up a little bit, almost back up to 20, and it just tells you that people are, maybe a little nervous about the market. And we're talking about interest rates. Okay, so these are some of the things going on in the world today. I'm waiting. I don't think Whirlpool announced yet. If they did, it's a pretty good beat. But I didn't see the numbers come across. But I follow Whirlpool just to get a handle on the state of the housing market. Okay, Whirlpool is up $2.50 after market trading. I know Tesla gets a lot of credit for the up market last week, but American Express is up over 10% just on Friday alone. So a lot of stocks went up last week. Tesla did give back some of its gains today, and I just think it's just a lot of move very quickly. And Tesla, let me hold on. Tesla was down $11, over 6% today. So a little bit of give back on the Tesla. It just seems to be the most interesting stock that people love to follow. The electrification, the EV business is just booming right now. Ford cuts prices. That's probably going to spur other auto manufacturers, OEMs, to cut their prices. If prices are cut, usually prices go down, demand will go up. And that's what people are expecting. That certainly is Tesla's strategy, because they make such a big profit margin that if they cut their prices by 20%, they're still making money. But if Ford or GM cut their prices by 20%, they're losing money. Tesla just has a much lower cost structure because it's a new company. They're not stuck with legacy costs and old factories and labor and unions and all these other things. So there is a cost advantage. And since franchisees didn't want Tesla around, it's just a very competitive industry. Tesla has gotten really good at the direct-to-consumer model because of all the franchise laws. So they kind of used a lot of the franchise laws against the franchises that were using those laws to try to stop Tesla. It's just amazing how certain things backfire, and we'll see what happens. I know that with Ford, that the Ford manufacturing is asking dealers to commit a ton of money. All the dealers of all manufacturers are being asked to commit a lot of money to upgrade their dealerships to more green, to service electric vehicles. Some dealerships are going to do it. Some are just going to fold, and it's going to be very interesting. The big difference I see in the last couple of years in three industries: auto manufacturing, airlines, and energy. These three sectors have gotten religion about profits. They used to be all about market share, and now they really are they're about profitability, and that's why they are making the moves they make. It's been a big change, because it used to be that if you want to lose money, you invest in energy, car companies, and airlines. It was like, yeah, if you want to generate tax losses, that's where you go. And now they are real industries with who are really incredibly financially disciplined. Okay, but let's talk about earning. I don't know if I showed you this just real quick. Tesla down $11 in the regular trading session today, and let's get to this. The Federal Reserve is likely to hike interest rates again. What that means for you, right? It means a lot of things, but right now the average credit card rate is 19.99%, which is a record high. So it's 20%. So it really does behoove you to try to get your balance moved over to a zero interest rate card. And it really behooves you to not use the credit card. So I understand people using credit cards and paying the balances off over time are people who have to do that. But the interest rate is so exorbitantly high. It's like you'll never pay it off if you just make the minimum payment. It can take like 30 something years. the amount you're basically raising the price of everything, not by 20%, but by 20% a year. So if you pay $1,000 for something, you're paying $200 a year. So in 5 years, you could have bought another one. Actually, it compounds, so it's even less time. So that's one thing. The other thing is that HELOCs and adjustable rate mortgages, which are tied to something like the prime rate or other short-term interest rates, those could move higher also. So a lot of short-term rates could move higher, but I said that not all interest rates are created equal. So if you take a look though, as and I might as well just show you the interest rates. I'm going to show you the whole yield curve. All right, just bear with me one sec. What happens is when I make my screen bigger for showing it on the live stream, it's harder to navigate. Just bear with me. This is going to be eye opening. Okay. All right. So the 6-month T bill is 4.788%. The 3-month is 4.6. The 2-year is 4.24. These are okay yields, and yet the 10-year is only 3.5%. It usually would think it's the other way around. You usually like the 6-month would be 3.5, and the 10-year would be like 4.7 or 4.6 or 4.8, something like that. But it's flipped. So short-term rates are actually higher than long-term rates. That's what we call it an inverted yield curve. And so even if the Fed raises rates, the Federal Reserve is actively trying to slow down the economy. They're trying to tamp down demand. They're trying by making things more expensive, by lowering your quality of life is what they want to do to bring down inflation. So if they crush demand, prices go down. But long-term rates are not going up. They've been kind of flattish for a little while. Yeah, they went up a few months ago, but in the last couple of months, they've been pretty flat. In fact, the 30-year mortgage rate was in the sevens, and now it's about 6.2, 6.4, depending on where you look. And if investors believe that the Federal Reserve will succeed in slowing down demand, slowing down the economy, bringing down inflation, you're going to see long-term interest rates, in my opinion, come down even more. So while you see short-term rates go up and you hear, oh, interest rates are up, and then the next segment on TV, or the next person you talk to says interest rates are going down, you're like, they're going down, they're going up. What the hell's going on? We're talking about two sides of the same coin. On one side are short-term interest rates that are very sensitive to what the Federal Reserve does. When the Federal Reserve raises rates, short-term rates go up. Also, like your checking account, savings account, CDs, those go up a little bit. But the rates that you borrow for long-term and the rates of bonds that you buy, or long-term bonds, those rates could go down. Because if we go into recession and we squash inflation, it makes the yields of longer-term rates more attractive, which makes them more buyable by investors, and rates go down. So that's how you have rising rates and falling rates at the same time. You just have to know if you're looking at short-term rates or long-term rates. Short-term, long-term. That's the way it works. So I hope this was eye-opening to you and helps you with your understanding of interest rates. So it's a good time to be a saver because you're getting yields finally from treasuries and CDs, money markets, savings accounts. And now your borrowing has gone up a little bit, but the borrowing of long-term rates, even though it's up a lot the last few months, it has been pretty steady. I'm not saying it's good that mortgage rates have gone from like 3s to 6s, but long-term rates have been trending a little bit lower, and they could continue to go lower again because if the Fed does succeed in slowing down demand and bringing down inflation, and we are expecting that, the street in general is expecting inflation to go down a lot, you could see mortgage rates go back to the 5s very easily. You could see the 10-year Treasury go down to the low 3s, even high 2s again, pretty easily. Not too tough to do. And remember, the Federal Reserve has peeled off its balance sheet probably close to $500 billion since it started to get rid of the bonds on its balance sheet. And so far, it hasn't really hurt liquidity. It hasn't hurt credit markets. And, just overall, the market's been incredibly resilient. And lastly, statistics, non-farm payrolls, well, I should say first-time unemployment claims, non-farm payrolls, GDP, none of these are shouting recession yet. So the chorus of investors who believe in soft landing or we avoid a recession, is getting louder. This coming Friday, we do have the next non-farm payroll figures, the employment report for January. We're going to be looking at that very closely to see if the labor market is actually getting a little bit weaker, if wages could stop going up. That's something that the Federal Reserve would like to see before it starts to pause raising rates and maybe even cut rates. All right, so that's the deal. That's what's happening in the market. That's why nobody's doing anything right now, because we need to get through Wednesday. We need to get through Friday, and we've got a boatload. Almost half of the S&P 500 companies are reporting earnings this week, including tomorrow is Meta, which is Facebook. I think Wednesday or Thursday, you've got Apple, you've got Amazon, you've got Google, you've got the biggest companies are reporting their numbers coming up in the next couple of days. So it's going to be just a crazy busy week, and nobody wants to get in front of it. So if you don't have buyers and you just have some sellers, that alone creates a generally drifting lower kind of market. And I think that's what we have. I don't read much into today's drops in any of the major averages. It's just that nobody wants to buy ahead of these big announcements, which means you only have a little bit of selling left over. So stocks drift lower on pretty light volume. All right, that's my story. I'm sticking to it. Thanks so much. I'll see you guys tomorrow. Oh, one thing. I did do the radio show today. There's been a it's not really an echo. There's been like a feedback loop in the audio, and they think it's this device that you can't see it. It's on a camera. I don't know if you could see it. See this device? This is a little computer, and it has a program in it called Mumble, and that's how I go direct to the radio station. We think that I need a new device. So there was a feedback loop. It sounded like an echo, but it was really a feedback loop. And until we can solve it, hopefully by tomorrow, I'll be broadcasting directly from Long Island News Radio's studio. And I'll see if I could stream it on my smartphone tomorrow. But just want I did not skip it, and it's I'm doing it, and I love doing it. So just a little update on that. Okay, have a great night, everybody, and I will speak with you tomorrow. Thanks.